Morning, everyone. Welcome to our Phillip Securities Research morning call for today. We have a few stock counter updates, including results for Micron, an initiation on UltraGreen, an update on ThaiBev. For technical analysis, we have the S&P 500 and the Philadelphia Semiconductor Index. And lastly, for macro and sector outlook, we have the US software quarterly as well as our usual Singapore weekly. This is our usual disclaimer. The information provided is solely for education purposes and should not be considered as financial advice. Yeah. So I have time to Ivan to get started on Micron's results. Thanks.
Yeah, thanks, Dave. I'll be presenting on Micron's third quarter 2026 results. We published a report this morning titled as Breaking the Boom and Bust Cycle because Micron has signed several strategic customer agreements, SCAs, which we believe will be able to reduce the cyclicality of Micron's business. Yeah, exactly. Yeah, so Micron performed exceptionally well. This is their record year-on-year revenue growth. The third quarter 2026 revenue spiked up by 346% year-on-year, and adjusted PATMI also spiked up by 12 times year-on-year. And this is being driven by a more than 200% year-on-year increase in DRAM and NAND pricing. In terms of the positive wise, as mentioned, Micron signed 16 long-term strategic customer agreements, SCAs. So these customer agreements will last till 2030. Previously, their long-term agreements usually only last for 1 year, and this time is about almost 5 years. As you can see in the chart at the bottom left-hand corner, this is Micron's quarterly revenue. As you can see, historically, Micron's revenue goes through a series of boom and bust cycles, and each cycle lasts for about 4 to 8 quarters. If we consider the most recent boom cycle starting from second quarter 2025 itself, and we take the historical 10-year average, the light blue color line shows the average quarterly revenue, which is about $8 billion. And going forward, the red color bar shows our estimated revenue that can be achieved from the strategic customer agreements. It is the red color bars. So we think that these strategic customers will be able to reduce the kind of cyclicality during a bust cycle because it is able to help Micron achieve higher than historical average revenues. Yeah, going to the negative, Micron guided higher capex for this year and next year. However, we don't think it is a huge concern because we believe that their operating cash flow can more than cover this elevated capex, and this elevated capex is being used mainly in construction to build up their manufacturing facilities so as to meet the surging memory demand. As for outlook-wise, Micron expects the undersupply to last beyond 2027. This is also consistent with Samsung and SK Hynix outlook-wise. They also expect undersupply to last till second half 2027. Yeah, so just an elaboration, the SCAs represent about 20% of DRAM revenue and 30% of NAND revenue. Volume. Yeah, so this is being reflected in the red color bars. And also, just some more color from the SCAs itself. The remaining purchase order, which is, you can think of it as order book from the SCAs, is $100 billion. So previously, Micron did not have an order book. Their RPO before signing all these SCAs was only $5 billion. So after signing all these SCAs, the RPOs became $100 billion. So, and we think this is a very strong sign that customers are willing to commit because customers have also put in deposits of $22 billion in order to secure this memory supply. So we think that Micron's customers, which are the large hyperscalers and also chip makers like NVIDIA, AMD, they are willing to put in these deposits and give Micron an order book because they are committed to secure long-term memory supply. Yeah, and also a majority of the SCAs are designed such that they have a floor price and a floor ceiling. So if Micron mentioned that the floor price of the SCAs are at margins above Micron's historical peak gross margins are at 63%. So we do think that this this is a good sign because it can reduce the earnings decline during bust cycles. So we think that there is definitely a structural increase uh, in the prospects of Micron's business, and we raise our target price to 1,870 because firstly we raise our revenue and PATMI forecast, and we also roll forward our model to FY27 PE. We set the PE as 14 times, a 50% discount to average average PE of about 29 times, because there's a huge discount because a large part of Micron's business, about 50%, is still subject to cyclical demand. Yeah. And we take the average from the high-end chip makers, like for example, NVIDIA, AMD, Intel as the average PE. Yeah. And also their memory peers, SK Hynix, Samsung. Yeah, so that's it for Micron. I'll hand over the time to my other colleagues. Yeah, thanks.
Hi everyone. Good morning. Thank you, Ivan. So I'm presenting on US Software Quarterly. For the first quarter, the theme is that the SaaS premium valuation is under pressure, continues still from the previous quarter. That's like this. Thank you. So the fundamentals remain resilient from what we see despite the AI fears. So the market, however, continue to price in weaker long-term growth. But the near-term fundamental, as we see from the slide, remain resilient. The software last 12-month revenue grew accelerated to 17%, higher than 16% from the previous quarter, and this is 4 percentage point higher than a year ago. So this is currently the strongest pace in the 14 quarters. And then if we exclude the cloud providers such as Microsoft and Oracle, because we want to exclude the infrastructure growth, the growth is currently at 16%, still high as well, compared similar to 17% if we include them. And if we look at it, we narrow our view to the large capital cap software companies. They continue to outperform. They delivered 70% year-over-year growth. This is higher than 14% a year ago. So this to us suggests a limited impact from AI disruption at the higher end of the sector, software sector, large cap companies. And they also maintain a higher superior profitability compared to the smaller caps, which is interesting what you could look at. Yeah, next slide, please. So looking at the share price for the software companies, we see slight recovery for the valuation from the cybersecurity names. So the IGV closed at 88 points. This is, however, still 20% year-to-date low, but it rebounded 4% quarter-over-quarter. And however, it underperformed the broader market, which is S&P 500, which grew 8% while year-to-date, while IGV closed 20% year-to-date lower. In May, the sector rallied about 21%, driven by the cybersecurity names and AI-focused software. So this is from names like Palo Alto, CrowdStrike, and as well as AI-focused software such as MongoDB and Snowflake. And also because of the optimism that is coming ahead of the Oracle year-end full-year guidance that they were expecting better. But this is proven to be short-lived. That in June, the share price declined further because of the higher capex guidance from the Oracle. And then what's to add is that the investor rotated into more attractive play, which is AI infrastructure beneficiaries, which include from overviews, Semiconductor, and also AI IPO SpaceX, which they year-to-date increased by 90% on also AI IPO SpaceX was upgraded in a premium. Microsoft was flat, continued to be down 26%. Then the software sector derating persisted. Palantir fell 40%, no longer the premium valuation, and as well as Adobe and Salesforce, which were also one of the among weakest performers. Next slide, please. So our suggestion is to lean into the AI winners. We prefer software companies which are involved mainly in the infrastructure, cybersecurity, and data analytics. So these are the direct beneficiaries from the AI spending, and the near future, the more AI spending means like this company. Infrastructure providers from our suggestion is Microsoft, and then Oracle. For Microsoft, which is the main provider for OpenAI, and it goes public, which would also positively affect Microsoft. And Microsoft also AI revenue has doubled year over year, and then they also got this OpenAI related backlog that the conversion in the near future will contribute more meaningfully in 2027. Also, at the same time, the productivity and business process business is growing modestly, and we expect more from the price hike in July, the new E7 Copilot package, and continue with Microsoft 365 Copilot adoption. Then we also get Oracle. Revenue visibility remains strong. The RPO contracted rose about 4.6 times year over year. And we expect the cloud infrastructure revenue to surge by 109% and to be supported by OpenAI 300 billion OCI commitment that is starting in 2027. And then this target build-out is tracking as progress as what they expected. A positive outlook for both of these companies. As well, we recommend the data analytics company, which is Palante. Commercial revenue is growing well. US revenue, especially from the US region. Management has raised guidance for revenue and adjusted operating income for 3 quarters straight. And then the demand remained robust. Backlog was double year over year. Top 20 customer spending rising 50% means better pricing power, and as well as customer count increasing as well. And then lastly, for the cybersecurity names, we suggested Palo Alto Network. We think this is well positioned to benefit from the cybersecurity market, especially they would be one of the main beneficiaries from the AI native security market. As the AI theme grow, also means that cybersecurity companies Palo Alto would grow as well. They would be positively driven by rising cyber threat and also cloud adoption. And also for them, platformization strategy would serve them well. So, but however, on the application software side, which is include ERP and the CRM, we downgrade them to neutral for both Adobe and the software provide to neutral. Though the software remain resilient in our view, and they continue to remain mission critical and reliable for the software, but the growth has slowed for these last 2 to 3 years, despite them having earlier head start in AI compared to the others. And although the AI adoption is accelerating as what they suggest, but the revenue contribution is likely to remain immaterial, which is less than 5% of revenue in the next several years. So unlike some peers, which already see meaningful AI-driven monetization. So hence, we derate the application software valuation. And we don't think that they could recover the valuation in the near term. Hence, we remain neutral. So we believe the application software would underperform AI developers. So for many reasons, that the AI spending for the traditional software budget would go to allocation for AI initiative instead. And then AI developers such as Anthropic and the OpenAI would capture larger share because they got superior models and they keep developing it. And they could monetize it better. And then hence would means that software license demand will continue to plunge. And then software pricing power will also weaken as they prioritize AI investment instead of in their IT budget. So that's it. Next slide, please. So this is our key financials for the software and also for our stock recommendation. As what we suggested earlier, our recommendation is to maintain, accumulate for Microsoft. And then also Palo Alto Network, we have buy for Palante, and we also have buy for Oracle, but we derate Adobe and software Salesforce to neutral from previously buy because of the reason we mentioned earlier. So that is all from me. I will hand over to the next presenter. Thank you.
Thanks, Fahmi. I'll go through UltraGreen AI initiation. So for UltraGreen AI, background is that they IPO'd in December 2025, and they manufacture and sell indoor cyanine green vials. Next slide. So a bit about the indoor cyanine vials process. UltraGreen AI is the only company with a major international presence in terms of supplying ICG vials. They have about 63% market share. And the next largest competitor has about 20% market share. So their market share currently is in a near monopoly position. And the way their products are used, so majority of their revenue is from this vial called ICG vial. And the way it's used is where firstly they procure these vials in powder form. ICG has to be in powder form because if it's in liquid form, it's unstable. And the maximum hours you can have it as a liquid form is 6 to 8 hours. But when you freeze dry it and keep it in powdered form, you're able to keep it for longer. So the vial that UltraGreen sells is in powdered form. And the way it's used, they mix it with this ultra pure water called water for injection. And then that dissolved solvent is then injected into your veins. So once it's injected into your veins, the way it works is simply thinking of it as the liquid binding into your blood proteins. And once it's binded into your blood proteins, as you can see from the picture, your blood flow will be in green. So the main reason surgeons want to use this firstly is to have a better idea of where you have good blood flow and where you don't have good blood flow. So when you look at that picture, even though it's the same part, certain parts have poor perfusion, which means poor blood flow. Other parts have good blood flow. And this is something you cannot see with your naked eye. And that's the reason you need ICG vials. So because this powdered form or this ICG vial cannot be seen with the naked eye, it's usually bundled with a camera called near infrared camera to help surgeons make assessment of where blood transfusion is. So like we said earlier, the benefits really is to see which tissue has a good blood flow, and it also allows you to map certain anatomy that is not visible under the mainstream light, which is white light. So this anatomy can include your lymphatic channels, your bile ducts, and this is really what surgeons or doctors use these ICG vials for. So why is it gaining traction? Because surgeons prefer to have real-time visualization data. So what this means is that you might have heard of your MRI, CT scan. So doctors will usually do this before they recommend any surgery, but that's static. You have to do it before the surgery. And once the surgeon goes into the operating theater, they're not going to have the same visualization. But for this, you can go into the operating theater, you can inject it into the patient, and you get live data, and you can make your surgery decisions right there. So it provides this real-time visualization that other surgical scans don't provide, and that's why the product provided by UltraGreen is gaining traction currently. Next slide. So next, in terms of the main products that they sell, it really falls into two buckets. First is your diagnostic green segment. So this is what we saw earlier. It's your ICG vials. And ICG vials cannot function alone. You need your camera because it's not visible to the naked eye. So you inject your you inject your ICG and you use the camera to see. So that comes as a segment on its own. The second segment is your UltraGreen data platform. So previously we saw the picture. There were certain parts which were green, certain parts which were not so green. So from this itself, you would know that there is some subjectivity in how you interpret the data. So that's where this quantification software comes in. It tells your doctors or your surgeons exactly which areas are well transfused or which areas have good blood flow, and it assigns a percentage to it. So it quantifies your blood flow levels and it gives you a better idea. And it removes your decision making bias that might be present for surgeons. So in terms of revenue model for your ICG vials, it's on a per vial basis. Usually it's charged between 130 to 150 historically. And currently the ICG vial is approved for use in over 41 countries for UltraGreen's ICG specifically. And for ICG in particular, you don't need approval to sell it. It's a generic drug. It doesn't have patents. It was first approved in 1950s, so you know that the safety profile is really safe. So even if you don't have approval, you're still able to sell it in markets. And so what UltraGreen does is that it also sells in markets where it doesn't have approval in. So what the approval really helps with is that in a market, if you get approval, then other competitors cannot sell their products in that market. So for example, in Singapore, UltraGreen got approval for their ICG die, and once they got approval, the current competitor had to leave the market because UltraGreen was the one with the approval to sell it. So it's really more of a market share strategy when UltraGreen tries to gain approval in the countries it operates. So this is commercial. It makes up majority of revenue, close to 95%. The IC flow imaging hardware is really to expand into Asia. So in the US, hospitals are able to afford your imaging hardware. This hardware usually costs between 50,000 to 200,000 per camera. And in Asia, some hospitals, say in Indonesia, Malaysia, they're not going to be able to afford it. So what UltraGreen plans to do is to lease these cameras that they manufacture internally. So they manufacture internally at a very cheap cost, and they're planning to lease it to hospital operators across Asia. And it's at a nominal fee of about $500 per month. So this is going to increase your total addressable market in Asia for them. Currently, it's approved for 45 markets, and it is usually going to be a bundled procedure or bundled offering in Asia. So for UltraGreen data platform, the quantification software plus the cloud system that accompanies it is a pre-revenue. They currently applied for Europe approval, and it is expected to be received either this month or the following month. And once they receive Europe approval, they plan to apply for US approval. So these two are huge markets, and this is where they want to gain traction for their quantification software because it's much more expensive compared to your ICG vials. They can charge it on a subscription basis. If they charge it on a subscription basis, it's going to be $20,000 to $30,000 per year. If they charge it on a per procedure basis, it's going to be about $1,000 to $3,000 per procedure. So the cost profile is quite different compared to your vials, which is just a few $100s. And so we believe what they want to do is to really test the product out and in the developed markets. And that's why they're going to Europe and US. Next slide. So this just shows UltraGreen's supply chain. So we like to look at it in terms of 4 distinct categories. Your first one is your API supplier. API supplier, you can see them as the supplier for the chemical molecule, indocyanine green. Currently, they have 2 suppliers. One is TopChem from Germany. Second is um, first is Wachem Organica from Germany, and second is Topken from Ireland. So both of them exclusively produce your indocyanine green molecule for UltraGreen. So that's the first part of the supply chain. Second is your ICG production. So production, you can think of it as the freeze drying the product. So the API suppliers provide it in liquid form. The ICG production companies, such as your Thermo Fisher, they would freeze dry the product to increase its shelf life. And the third part is your distributors. So once it's freeze dried, once it's packed, you need to distribute it. And for Germany and Ireland, UltraGreen does direct distribution. Elsewhere, close to 54 countries, they use middlemen or distributors to distribute their products. And yeah, if you look at this supply chain, you can see that currently they are a asset-light model. So what they do is to really outsource most of their work to other companies in the vertical supply chain. And that's one of the reasons why they currently have a high gross margin. Next slide. So this is just an intro to their financials. You can see that their revenue has been steadily increasing. In FY22, it's about 50 million. In FY25, it was close to 142 million. So it had a CAGR of about over 40%. And the main growth for this came from price increases in the US market. So in the US market, your per vial cost increased from $66 per vial to $158 per vial. So this is more than 2 times increase in the price of their vials. The reason they're able to do it is because they are still selling their products at a lower cost compared to competitors. Your competitors like Stryker, they're selling the product for $450 around, roughly. But UltraGreen is still in the 100 plus range. So they do have that room to increase their US prices further. And gross margins wise, you can see that it has been on an upward trend, whereas net margin dipped in 2025. The dip is largely from their normalizing tax rate. So their tax rate doubled. And that was because they had some certain provisions that they have been using up. Revenue segmentation wise, the graph on the right, you can see US still makes up the largest proportion of their ICG wide revenue. The rest of the world is slowly increasing, but we do expect further growth to come from Asia, and we think this part of the pie will increase further. The data platform revenue is currently negligible because it's still considered pre-revenue. But once it gets its approval in US and Europe, and it's commercially launched in 2027, we do think it can be a sizable revenue source in the future. The company is currently net cash. They paid down all their debt. They have about 176 million in net cash at the moment. And their 2-year earnings CAGR, forward earnings CAGR that we model is about 18.5%, which is still below their current growth rate. Next slide. So why we think UltraGreen is a good buy at this moment? Their fundamentals is still intact. What they want to do is that they have categorized a few procedures that they deem as established procedures. So what they mean by this is that these procedures use ICG currently, and they have room to increase further because it's a standard of care. A standard of care means majority of surgeons for that procedure is using ICG in their surgeries, and so it's easier for you to expand market share in a procedure that you already have a foothold in, and that's what UltraGreen is focusing on. From market data, what we observe is that apart from the established procedures, emerging procedures or new opportunities, there is still growth close to double digits, and so that is another opportunity area for UltraGreen to tap into. And lastly, another thing we observe is that NovaDuck, it's another company. It's getting an expiry of its breast SLN indication in June 2026. So previously we talked about approval in markets. This company called NovaDuck has had approval in the US for this specific procedure, and it's expiring this month. So once it expires, we think UltraGreen has the expertise, the data set to apply for approval and to potentially gain a market share of this $66 million market. And this approval process will likely take 6 to around 12 months. And if it does get access to this market, we think it's a huge revenue source for ICG. So the second investment thesis is that they are moving away from or they are expanding from a die plus hardware model to an integrated ICG platform. So previously we saw the quantification software, Perfusion Works. What it really does is to solve the subjectivity issue that surgeons have when they observe the indocyanine green under your camera. And we think this would be a potential strong revenue source because approvals are already underway, and this specific software itself, it can be used across cameras. It's not tied down to only UltraGreen's camera. It can be used for Daiichi Sankyo's camera. It can be used for Striker's camera, and that means that they might be capturing market share in hospitals which don't even use their cameras, and we think that would expand UltraGreen's revenue profile. Third reason we like them, the company is currently eyeing growth initiatives or in terms of M&A and investments in their vertical supply chain, and we think this can improve their supply chain resilience. So they do plan to, or they are currently interested in investments in API suppliers, freeze drying, lyophilization, as well as distribution in Asia. And we think if they do invest, it can improve their supply chain resilience. In terms of valuation, we use DCF at 10% WACC and 7x exit multiple, which is a conservative estimate compared to peers. And we derive a TP of $1.92. So we think their valuation is underpinned by their decade-old regulatory approval. So they have been applying, or they have been increasing the indication of where ICG can be used. And they're currently updating their use case. And we think this is not something a new entrant will be able to do very easily. And it's going to take them years to get to the same position UltraGreen is. Second, they have the API exclusivity with their two API suppliers. We think that strengthens their supply chain materially. And lastly, we saw that their gross margins are very high, close to 85%, and that is really due to their monopoly position in the market. They have over 60% of our market share, over 60% of our market share for ICG. So we initiate with a buy and a target price of 192, and they're trading at a PE of 15.2 times. I think that's all, and I'll pass on to the next speaker.
Thanks, Hashim. Good morning, everyone. I'll move on to the technicals. So first up, this is a chart of the S&P 500. Last week, on the weekly basis, it was down 2%. And also on the weekly, it broke down this 10 SME level, which is, I think, quite a key level since price has been holding it as support since the rally from the March bottom. And also on the daily time frame, there's potential head and shoulders forming as well at a key longer term trendline resistance as well. So I think price is currently at this green line at the 50 SMA level. So I think potentially for now in the near term, we could still see some further weakness ahead as prices remains under some of the short term moving averages like the 5 to 5, 10 and 20 SMA levels, which are the blue, red and yellow line you see in the chart. So as of now, I think resistance likely to be at 7,390 to 7,460 area, which was the Friday highs to gap fill area. And then as for support, I think likely to hold at 7,150 to 7,265 area. That would be the previous range consolidation area that at the end of April, as well as a 38.2% Fibonacci retracement level. And then the 7,265 level was a swing low from somewhere near the middle of June. Yeah. Next one, looking at the chart of the Philadelphia Semiconductor Index stocks. So in terms of the daily chart, there looks to be a bullish trap above the 14,000 level. So price attempted to break above the 14,000 level. However, subsequently in the next four trading sessions, price continue to remain under this key level with some resistance on Thursday as well. So I think with that, coupled with a bearish divergence on some of the momentum indicators like MACD, there's potential for some continued short-term weakness ahead. In terms of the current resistance, likely to be at 13,530 to about 13,860 area, as well as in terms of the support, likely to hold at 12,130 to about 12,670. So in terms of the stocks, the key support there will be likely the 20 to 30 SMA area, which is the yellow line to the green line that has been holding the rally, as well as a key uptrend support line to look at will be this blue trend line in the chart. So that will be about 12,600 about 12,600 about there for the semi-con index. So that's all from me. I'll hand over time to Paul for an update on ThaiBev.
Yeah. Thanks, Zane. So I'll just give a quick update on ThaiBev. They do have this annual information meeting with shareholders and also with analysts. This is because during their AGM, if I'm not mistaken, if you're not a Thai citizen, you can't actually attend the AGM. Yeah, from my understanding. So they will have this briefing for shareholders and then for analysts. But the key highlight for me, at least, was that they are coping with a fragile consumer. Next slide. So there are no numbers provided in this briefing. There are just comments and there are just comments and so forth from the management. So let me just give you some highlights. So in terms of from a top-down perspective, the Thai consumer is actually enduring a very stagflationary environment. So I think prices are rising, and then this diminishing spending capacity. So because incomes, they said that generally flat for most of the consumers. So you face this really the worst of both worlds. So how do they cope? So the key strategy for them right now in this type of environment is to build smaller, more affordable packs. So basically, shrinkflation. I mean, that's one way you can understand it. So what they've done is actually make the beer can smaller, make it palatable, easier for a consumer to buy with their limited budget. And then convenience through ready-to-drink spirits. So they used to sell maybe brown spirits or, like a better word, hard liquor in huge bottles. Now they make it into a mixer, into canned products. So easier to drink and can also target the younger crowd. And they will also move to new products. This is mainly for the non-alcoholic products. I think protein beverages is not the hype now. So this is another way to also target the younger generation. And brand extensions, apart from selling Chang beer, you sell Chang soda, Chang mineral water. So I mean, these are just operationally what they're doing. Cash flow, they say, should improve because they did do major capex in Cambodia, and they did set up a huge dairy farm with cattle and alfalfa and so forth. In Malaysia, I mean, if you want to follow, you can listen to, you can follow F&N Malaysia, the listed company, which is making one huge bet on dairy farms. So this will improve the balance sheet and provide some flexibility for acquisitions. So in terms of our recommendation, which is the third bullet point, I think generally we maintain our buy purely for valuation reasons. I think they are attractive at 10 times. And they are paying a dividend yield of at least 5.5 cents. So we're assuming dividends doesn't grow. So this is the yield that they're going to pay for at least this year. And the earnings this year should be intact because their margins are resilient. They already hedged out their raw materials. So of course the worry was with the Middle East conflict, aluminum cans and so forth would have risen, but they actually locked in most of the prices before the war happened. So that can actually hold on to the margins, which was the record level, I think, in the first half of this year, the recent results. And by reputation, they are always very aggressive in operating costs. If the earnings are not coming as planned, they actually can make aggressive cost cutting in admin and marketing. The next one is basically Beer Co. So the hype has always been them listing their beer business in Vietnam and also in Thailand. So this cannot happen without a strategic investor. So my speculation is that they probably had some investor that they planned, Asian investor, maybe from China, but that didn't pan out. So now they are looking for strategic investors. We think could be some maybe Japanese. And Southeast Asia, especially Vietnam, is still an attractive, growing beer market and so forth. Some of the other things are more minor. I'll just do very, very roughly. I mean, not going to move the share price or anything, but there has been some regulatory changes, that production has been liberalized. Communities can actually open alcohol production if you hit, but there must be a minimum quantity. But they said that there's very few applicants because there's also restriction in marketing. There's some other regulations on limiting the ability to market alcohol products. I won't run through all this. These are really just highlights from the meeting, but there is the report. If you want to read, you can read on further. But because this all we're not gonna move, not share price impactful, so I'm not going to discuss too much. Next slide. Next slide. So I'll move on to our usual macro wiki. Not much news, but I think they got some two data points that came out for Singapore. I think largely positive data points. So we have industrial production. So industrial production, let's think of it of manufacturing activity, largely, I guess. But that is generally performing well, led by electronics 36 and semiconductor 36. So it's not a typo. Both are actually growing at 36, which is a really strong growth. Because these are usually only low single digit kind of growth. I think similar to what we're seeing in semiconductor, the electronic and semiconductors are actually very vibrant. Ready mix concrete is another one that's doing very well. So this is volume produced. So volume is up 26% from March 37. So year to date, volumes are up 29-30%. So you should expect ready mix concrete earnings should be even better than this. So because of scale and so on. So you're talking about maybe like Pan United, you're talking about Hong Long Asia. So these are the two ready mix concrete producers. Just a reminder, ready mix concrete means wet cement. You see those trucks with those cement. So it's ready mix, so they just pour on site, or they can batch it on site too. So let's think of ready mix concrete as wet cement. The other thing is called, so in the US, you had some inflation numbers. Generally, as expected, inflation is rising. It's the highest in 31 months. It rose 0.3% month on month, and it's trending to almost 4% by December. So if you want inflation to hit their 2% target, which is impossible, you're talking about maybe 0.05 or flat month on month, which is probably going to be unlikely. But for us, our general view on interest rates is we don't think there will be a interest rate hike. Our view is basically two reasons. Although the market's factoring, because number one, we think inflation has kind of peaked, and also we think it's a bit of a political bet I've got that I don't think that they can actually raise interest rates. And next slide. So move on to our tactical views. So the STI or Singapore market actually hit a record high again or last week. I forgot what was the index number, but year to date, it is up almost 12%. So far, the backdrop for Singapore equities we think is still positive. Economic momentum is resilient. So the exports in May jumped 38%. This is the highest rate of growth in more than 20 years. It's even stronger than during the pandemic years. And it's also driven by, of course, electronics and semiconductors also up about 80%. Semiconductors is probably 1/3 of all the growth. So it's not just semiconductors, it's other electronic products. The market is generally still attractively priced considering interest rates are only 1%, short-term interest rates, and even the 2 years only 1.5. In terms of the PE, we have a chart later, but the market is trading at the market is trading at about 16 times, still around the 15-year average. If you assume 1 year, one standard deviation, that means the higher quartile, if you take a 19 times PE, you're talking about maybe a 17% upside to the market. Again, this is mathematics. Not assuming it is, but this is how much before it becomes a bit too overvalued. And the market is only assuming 2% earnings growth for FY26, basically in line with where the banks are going. So bank earnings are so flat. So there isn't a lot of earnings growth being baked into the market right now. The dividend yield, I guess what is more attractive is on the dividend yield basis. The market is about 4.3, still within the average, about a spread over 2 years. So we think maybe another alternative, if the market is chasing for yield, would be, of course, a REITs, which is now trading about 5% yield. The other thing why the backdrop is positive is that even the economic growth in US is also picking up. As we did highlight last week, I think retail sales is now growing at the fastest in almost 3 years. Jobs is also recovering. We'll get more data this week, but I think the quality of the jobs is also better. I think it's by the economically sensitive sectors, which is like manufacturing, services, and not by healthcare and government, because that is more like government stimulus type of jobs. So there is a pickup in jobs and there is a pickup in consumer spending, at least in the US. So in terms of some of the key events for this week, we also have our SSP. So we have our Singapore SSP this Saturday at 10 and also our US SSP on the 7th. In terms of the some of the corporate events, insights is open to anyone. We have LHN and also IX Biopharma. I think I did see a IX Biopharma question. Feel free to dial in. It will be on I think Thursday. I think at 12 p.m. If it's open to anyone to listen in. Next slide. Okay, so this is basically the chart of the manufacturing activity on a moving average so that it won't be so noisy. So you notice that it's very vibrant in manufacturing activity in Singapore, which is talking about electronics and so forth. The green line and the red line on the left. The one on the right is also ready-mix concrete volumes. So if you look on this chart, excluding the pandemic, because the one is turn on and turn off production, uh, you're looking at production growth in volumes not seen since 2012. So when no, of course, property market was extremely vibrant. So this is one of the fastest growth in more than 15 years, maybe. Yeah. Next slide. And if you so this nothing, this is just on inflation, which is important if you have a view on interest rates. So for the US, you can see that although the red line is rising, wages and rent is actually trending down. So we still think that inflation has peaked, and on the right is basically if the Fed were to change and try to use the trim mean, which is the red line, they probably give them some excuse not to raise rates because they say that it's within the 2% target that they have. And it is just our view. The blue line is a target, so you can see it's hardly meet the target for so many years. Okay, I think that's it. I think I move on to Q&A. I think we got, I don't know, 50 questions or so. Yeah. Thank you everyone for listening.
Okay, thanks, Paul. Let me take on some of the questions first. Let's quickly go through them. Hold on, just let me look through. Yeah, someone asked, I think, why has the Max 7 done badly recently? Who outperforms, underperforms, and also what to buy in the weakness. Yeah, so what to buy, I will let the rest of the team say, speak on their stock coverage for the Max 7. For me, I cover Tesla, so definitely we wouldn't recommend Tesla. We have a sell call on Tesla still. Yeah, so I think for June, it was quite a weak month. It's very uniform. I think all of the Max 7 counters were down. The worst so far, I think it was Microsoft, right? Mainly questioning the payoff on their data center budget, and also even Nvidia was the outperformer, but still down as well. The main question and why I think the reason is because everyone's asking when this AI spending will pay off. With the capex rocketing to like almost over 700 billion on this AI infrastructure. Yeah, so I think that's the main question. We still believe, right, that the AI infrastructure leaders, right, looking at Nvidia, Microsoft, Amazon, Google, the main quality and the core for the Max 7 out. So these 4 counters out of the 7. I'll let the rest expand a bit more on the points here for each of the counters that they cover. Yeah, next question I'll jump to would be has SpaceX been included in any index yet? And why is the share price still weak? Yeah, so they have been included, I think, in the I'm not wrong, it's the MSCI and sorry, just let me look at it. MSCI, which was I think today, and also the FTSE Russell. Yeah, so those two are relatively small. If you look in the overall, you look at the SpaceX in general, it's a bit like it's $2 trillion, right? So this amounts that they are included in is really very small. And the big one, I guess the next biggest one is Nasdaq. It's not yet, right? I think 7 July they'll be included. Yeah, and the weighting is under 1%. So it's really quite small. And for SpaceX, I mean, I did speak on it quite a bit the last 2 sessions. It is still a loss-making company, right? It's severely overvalued, we believe. And a lot of them are buying into the sentiment and hype. It's very, very hype-driven, mainly by Elon Musk. Even the other company that he had listed, right, for longest of time, which is Tesla, right? The fundamentals are not there. People are just buying into the hype, that he wants to sell robots and fly to Mars. and also build a data center in space. Yeah, so people are buying into that, and I think that is what, you're buying a dream lah. But this dream, we're not very sure when will it come into fruition. It could be, 5 years, 10 years, 20 years, 30 years, right? So that is the question: when is it going to come to fruition? And based on whatever that they are selling, the story that they're selling now, we don't think it will be anywhere in the near term. I highly doubt it will be even 5 to 10 years. That would be very hard for them to do, right? Even to build the terafab, right, alone takes more than a decade just to get something as good or better than the current competitors, which is Samsung and TSMC. Yeah, to build to make semicons to that, to make chips, to that kind of level, it will take you many years and also a lot of money. So I doubt that there will be it coming anytime soon. Yeah, so so I think that's a big thing. Why the share price is big, it did jump up like almost 30-40%, and then 60+%, right? It reached 225, and I think there's a lot of selling off because they want to take profit from however much they made just from the IPO. So expect more volatility. That's my main thing to say here, because the big bucks of the release, right, for the insiders and the pre-IPO investors haven't come in yet, right? They'll be coming in different segments, in different tiers or like different dates. So the moment that hits the market, I believe that there'll be even more selling, and we could see share price decline further for SpaceX, when the insiders all can finally cash out after how many years or even decades, a decade of holding of SpaceX stock. Yeah, I highly doubt the Nasdaq, or actually the inclusion in Nasdaq, will bump up the share price much lah. Okay. So there's an Anthropic one and OpenAI one. Maybe I'll let Serena cover those two. One more here on Rocket Lab. Rocket Lab, is it a better alternative to SpaceX? Yeah, so Rocket Lab is very small in comparison to SpaceX. SpaceX did like almost 19 billion of revenue in 2025. Rocket Lab only did 600 million. So you can see it's 3% of their revenue. But you must look at it, Rocket Lab is really more of a space company. It really is a space company. Whereas SpaceX, although it has space in its name, it's becoming more of a AI company, even a data center company, right? If you look at the TAM, right, which is what everyone is talking about, total addressable market, I think SpaceX claims is 28.5 trillion, right? But over 90% of that total addressable market is from AI and businesses that it doesn't even have any operation in yet. So I think they are not selling themselves as a space company or rocket company anymore. It's more of an AI company, and even a potential semicon company if you look into the quite a long-term future. Yeah, so it really depends what you are looking at. Both are also loss-making, right? But of course, with the relative size of the revenue of Rocket Lab, the loss is quite a bit smaller than SpaceX. But if you want to buy into a pure space company, then Rocket Lab is something that you're looking for. SpaceX is not a space company anymore. It's more of an AI company now. Yeah, one more about SpaceX, asking why did you do a bond sale? Is IPO financing insufficient? No, it's not insufficient. This one, they just use the bond proceeds to convert it from one of their bridge loans. So it's more of a swap into from, I think, a bit of a long-term, short-dated bridge into long-dated bonds. So it's really just short-term to long-term, so that they can, I think, get a better rate as well. So it's not that they don't have enough money. They still have around, from what I'm reading now, it's about 100 billion in cash, right? From the last that they published. So they still have a lot of cash, but it's really just a swap. So it's just swapping bridge loan to bonds. Yeah. So for the one more question on the US banks, right, about the stress test. I think they're asking, where's that question? I think it's asking basically what's the key takeaways. So the key takeaways is that all the banks have passed, the 32 banks have passed, so that's quite good. what the Fed sees is the projected losses are very concentrated in credit card losses, the commercial industrial loans, and also the commercial real estate. So it's quite similar. I think just now that the credit card losses have sort of overtaken the commercial real estate, which was the top, maybe a year or two ago. And the capital requirements haven't really changed, right? They didn't do any change in that. And also the capital return announcements have I guess improved for all the banks. So for JP Morgan, they had a 10% dividend hike and also a new $50 billion buyback. Wells Fargo is 11% dividend increase, and then Citigroup also another 12% dividend increase, and Bank of America didn't really mention any sort of dividend or buyback increase or announcement, and also that one we have to wait to see. Yeah. And Goldman Sachs also, I think, increased it by about 11%, and then Morgan Stanley by 15%. Yeah, so for I think we still stand that for quality and consistency and overall diversification, I think JP Morgan still is the best, and we are still looking at JP Morgan. For Wells Fargo now, it seems like if you are more into a dividend play, it is the highest because they did raise their dividends by quite a bit, by 11%. And for Bank of America, I mentioned earlier that they didn't mention anything regarding their capital returns, right? So we will have to wait to see if they do any updates. Now let me quickly look through whether there's any other questions. Yeah, okay, I think there's no more for me. I'll hand it over to the rest of my colleagues. Thanks. Yeah, maybe to the US team to take on the first question regarding which of the stocks in the Max 7.
Yes, thank you, Glenn. I guess I'll take over some question for Apple and Amazon and also comment on them. So the first question I have is why Apple stock tanked on price increase? Do you think it's an overreaction as they can pass it on to the customers? I think in the short term, the market reaction kind of makes sense due to the increasing price. But if you really look at the long term, yes, I do think it's a little bit overdone. Because right now the entire memory price is going up because the AI data the suppliers are trying to prioritize the AI data centers customers. So the device makers, they are paying more for these components. Can they simply pass the cost on? I mean, for the long term, Apple's always trying to be the premium targeting. So they're targeting like the premium customers. So for the professional users, I probably think they wouldn't really change their buying decision just because the price went up a few $100s. But definitely the entry-level buyers, they're more price sensitive. So these are the people who's probably going to think about whether they want to upgrade the device at the moment. So the upgrade cycle is going to lengthen. But if we really look at it, Apple compared to other competitors, Apple is probably still the consumer electronic company with the strongest pricing power for now. So if all the competitors are facing the same problem and everybody have to increase price, Apple arguably will lose less because it has the strongest brand, it has the highest customer loyalty, and then the ecosystem that makes it very hard for people to switch. So for sure. But right now we're seeing the upgrade cycle that they're seeing is still very hardware driven. So the ultimate question to ask will really be where their Apple intelligence actually generate enough increasing demand in order to justify the higher price. So if you're telling a customer that, oh, now you have to pay a few $100s to get Apple device, people will ask, what do I get in return? So if the answer is their Apple intelligence does roll out really well, they have significantly better on-device AI, a much better Siri, and giving people more maybe production gain when they work, then of course people wouldn't mind accepting the higher price. But if their AI features continues to be just incremental instead of compelling that people have to change it, then definitely the upgrade cycle is going to lengthen. So I hope that answers your question. And our view on Apple is still neutral because right now everything is hardware. So we're yet to see very compelling evidence that their AI improvement is actually driving the demand. So that is when we're going to be more positive on Apple. So right now it's still very neutral. So with regard to the Magnificent Seven question, I guess Apple wouldn't be the company that we're recommending for now. I think I also saw a question on Amazon. So how's Amazon Prime Day sales? The Prime Day sales actually went up 5% year on year, and they've now expanding it to 4 days. So shoppers have a longer period of time and more opportunities to buy. And this is also the time where they roll out more AI powered shopping features, more personalized deal recommendation. So this helps customer to discover deal better. But what is bad about this time's Prime Day sale is if we look at the average order value, this is not official data, but from the startup data that we get, it actually fell 15% if you compare it to last year. So the average spending per shopper was much lower, and around almost 70% of their purchase item is actually cost under a 20 US dollar. So you can tell that shoppers, they're no longer focused on big ticket items like that. Because in the past, people kind of thought this was like the big deal day. So people are trying to get big ticket items like TV or like big furnitures, but now they're just focusing on values. But I wouldn't say it's a bad thing because this is very in sync with what they're trying to do. They're trying to target people that is more price sensitive, and they're trying to target more for everyday sales. So from their point of view, they're a customer who buys things like trash bags or like daily groceries every single month can be more valuable if you compare it to customers who only buy like a TV once a year or even every few years. So for them, the strategy is really to encourage repeat purchase and expand their groceries and everyday essentials. Which fits, I think, in the general backdrop right now when the spendings are pretty flat. So yeah, and right now we still have a cumulative rating on Amazon because if you really talk about Amazon, I still say roughly 70% to 80% of their upside actually come from AWS and their customer silicons. So those we're still seeing a lot of demand coming in and they're still spending a lot. So all these are very positive. The retail side is really, they're just trying to provide a very steady but much lower margin growth. And Prime Day was just a confirmation that the customer business continued to remain really resilient. Yeah, I think that is all the questions that I have. Let me just go through it one more time. Oh, sorry. There's one more. Apple is seeking approval to buy memory chip from CXMT. Do you think it will go through? I doubt it will actually go through because the political backdrop right now is very unfavorable because CXMT is not just another supplier. It has alleged links to China's military, and I think it's already on the Pentagon's blacklist. So several of the U.S. lawmakers have already argued that allowing Apple to buy from them will undermine U.S. effort to build secure semiconductor supply chains. And I think right now with the memory price really going up, and it's very different from maybe 4 or 5 years ago, where it is really just viewed largely as a commodity. Right now, it's like a very strategic asset because AI servers, they consume enormous amount of memory. So the US government is increasingly treating memory technology similarly to like advanced chips. It's like a strategic asset. So high chance, I don't think it will go through. Currently, Apple sources most of its memory chip from Samsung, SK Hynix, and Micron. These suppliers are expensive right now due to the demand and the tightened supply, but they're still technologically very advanced and reliable. So even Apple, they trying to get it from another supplier. I wouldn't think they're trying to replace the previous suppliers. It's more about them trying to improve their negotiation position and to reduce cost. So yeah, unlikely to happen. And even if it does happen, I think they would just start buying like a very small portion for their product. So I hope that answers your question. I guess that's all from me. I'll pass my time to my colleagues first, maybe the US teams.
Yeah, thanks, Helena. Yeah, just an extension for the which Mac 7 will outperform. Yeah, for my case, I cover NVIDIA. I do think it will outperform because I think the CEO has hinted that the next stage of growth for NVIDIA will come from the sovereign nations AI build out, as well as the enterprises increasing their workflows to agentic AI. So I think that will be the next growth driver for NVIDIA, and it's currently trading at a forward PE of 22 times, which is quite undervalued compared to peers average of about 29 times. So moving on to the questions, how does Micron compare to SanDisk, SK Hynix, Samsung? I think many areas we can look at. Not very sure which scope you're looking at, but if you look at business-wise, SanDisk is more focused on the flash solid state drive. So basically their memory products is similar to Micron's NAND products. So basically those solid state drive, they don't need electricity for it to operate. It can store memory by itself, and this is important in data center servers because it helps the data center high bandwidth memory chips to store memory as a standby memory first before the memory data being transferred to the high bandwidth memory and the GPU processors. So that is for SanDisk. For SK Hynix, SK Hynix has the biggest market share in high bandwidth memory. It has about 60% market share. The other two players in the high bandwidth memory space is Micron and Samsung. So Micron has about 20% market share. Samsung has about 20% market share. So answering your question for Samsung as well. Samsung memory chips make up about 50 to 60% of their revenue currently. The other half is the devices, the display, the Samsung TV, the handphone, so on and so forth. So I guess hopefully that answers your question. What will happen to the memory market after 2027? What is the peak in 2027? Actually, from just now the chart, I'm not saying that the peak will be in 2027. It's just that based on past cycles, we could reach a peak by the end of 2027. And this is because traditionally memory has been a commodity, which means it is a product that goes through boom and bust cycle, and it is exposed to the PC and mobile phones mobile phone OEMs and players within it. So for example, after 2 years of boom cycles, mobile phone OEM may have stocked up a lot of these memory products already, so their inventory is full, and then the demand will just plunge after that. So that's why you'll go through another 4 or 5 quarters of bust cycle before the inventory is depleted and they have to stock up again. So that is historically what has been going on. Mobile and PC segments make up about 40 to 50% of Micron's revenue. The other 50% is data center. Recently, because of this spike in data center revenue for Micron itself, the data center memory products for Micron make up about 70% of Micron's revenue already. So now, and furthermore, Micron has been signing all these strategic customer agreements which last 5 years into the future. So we think that this will cushion the impact from further bust cycles. And we think that it will structurally change Micron's model. It will not be so cyclical after this trend. What caused the previous boom bust cycle for Micron? I think I answered that. And why is this time different? So this time is different because, as mentioned, Micron has signed many of the strategic customer agreements. And just to give more context, last time during the bust cycle itself, it can be so impactful that Micron's earnings can actually go to negative because the average selling price for the memory products can actually plunge quite a lot, especially for the mobile and PC chips. But because Micron has signed the strategic customer agreements whereby the prices are also included in the agreements itself. So there is a floor price and a ceiling price. And Micron has mentioned that the floor price for these agreements are above the historical peak gross margins. So even the floor price can bring in higher margins than the peak from last time. So this will we think that this will structurally change the boom and bust cycle for Micron. We think it will make it more stable. And because of the greater overall trend is that currently, because of the strong adoption of agentic AI, there's more demand for memory because of the increasing context needed in order to train the AI models. So that's why memory has become a very strategic asset for hyperscalers and the high-end memory chip makers. Yeah, that's why we are putting a premium to the multiples itself, our assumptions. Yeah. Micron new target price is now 1,870. How long the wait? Yeah, so our target price is based on 1 year time frame. Doesn't mean that it will actually happen, but based on our models, we look forward 1 year in order to come out with this target price. Yeah. What is PC Partners business about? Stock has been doing well. Yeah, so we haven't met PC Partners management and we don't cover them. But I think based on my research, PC Partner they supply VGA chips to NVIDIA. So basically this VGA VGA cards, they are used in conjunction with NVIDIA's gaming GPU for the gaming it's being used in the gaming GPUs itself. So I don't think it is being used in the high-end data center chips itself. It's being used in NVIDIA's gaming segment. Yeah. So before that, NVIDIA's gaming segment has been doing well. But I think if we look forward 1 year, gaming is facing softening demand because of the boom and bust cycle as well. Yeah. For which gaming is also experiencing. Yeah. Is Chassan an undervalued stock? Stock has been tanking despite good news, and they are in semiconductor. They are not really directly exposed to semiconductor because based on my research, they are sort of like a mover for the strategic assets in semiconductor. So you can think of them like a logistical partner because they help to move the assets. Yeah. Yeah, so I think in order to give a better answer, we'll try to reach out to management. Yeah, thanks for raising this up. Is UMC expected to have more upside? They have a partnership with Intel. Yeah. I think for UMC wise, they are partnering with Intel because because Intel is coming up with the advanced packaging, and I think UMC may be trying to get into this front end aspect. Traditionally, they have been more exposed in the what's that called, the above 12 nanometer chips, which is more of the lower end chips. Yeah. So this may have more upside to their story. Yeah. Is Cerebras a cheap stock to avoid? Results look very bad after IPO. Yeah, I think there's a lot of hype during the IPO for Cerebras. I think they are more like a new cloud provider and also a custom chip provider. So going forward, the backdrop is that custom chip and new cloud will be able to gain because of enterprises demand to train their AI models outside of hyperscalers. But yeah, I think there's a lot of demand. I mean, there's a lot of hype being priced into Cerebras itself. Yeah. How will the potential listing of SK Hynix and Kioxia in the US market impact Micron? Currently, SK Hynix is trading about PE ratio of about 9 times forward PE. If they list in the US, there may be a further valuation expansion because of the greater liquidity in the US market. So I think that may further boost Micron's valuations because when people compare SK Hynix and Micron's valuations, they may both of them may get a valuation repricing because of this. Yeah. Yeah, I think I hand over to my other colleagues for now. Yeah, thanks.
Hi, thank you, Iban. So let me take some question. First is regarding the Magnificent Seven recommendation. So Microsoft, it underperformed recently. It was because of the derating of the whole sector, as well as the the IPO for the AI companies, which seems more attractive compared to the software company. But regardless, we still have a buy call for Microsoft. We do think that the revenue recognition from OpenAI related backlog, which is expected to materialize more meaningfully in 2027, would give positive outlook on Microsoft in the near future, and then it will further support growth. And then the demand continue to exceed supply, and then also the other business segment, which is productivity and business processes, is expected to continue to grow modestly from the factors such as the subscription price hike and the new E7 enterprise package. So remain a buy call for Microsoft. And then the next question is, what is your top software counters? That's what we presented earlier. Our top three counters recommendation is Microsoft, Oracle, and as well as Palo Alto Network, the infrastructure company, and as well as the cybersecurity. That is, as the thematic for AI grow, it also means this company would be positively affected, which means we positively buy call on this company. So why OpenAI is considering to delay the IPO? OpenAI may delay its IPO from what the management said is that they want to further strengthen their financial and what we believe that they want to demonstrate greater financial stability before they went for IPO. So SpaceX IPO proves that the market is willing to pay higher multiple valuation as what they went out for IPO at 95 PS valuation. So what we think is that OpenAI may want to, in the last few quarters, in the last 6 months, if they delay it to March 2027, what could even happen in the next 6 months, right? They might want to show that in the last quarter for this year, they want to show higher revenue growth, for example, and then they want to narrow the losses, for example, to show, just to give a better IPO signal from what we think. Because this company is currently, they are, market projected significant loss, and as well, they got large commitment and so on. So they might want to improve their financial position before they went for IPO. So for a better signal for the IPO, because the market is willing to pay for AI IPO at a premium, so they want to get it in a good optic before they went for IPO, from what we think. So we'll delay in OpenAI, put pressure on Microsoft and Oracle and AI stock. We do think that it's likely to create some pressure, especially on the Microsoft and Oracle, because most of their backlog, right, the majority of their backlog is tied to the OpenAI. So previously, we think that OpenAI may be able to pay their commitment, and in 2027, as they went public and received the money from the capital market. But we still think that is the case, that even if the company delay the IPO, maybe to the March 2027, still think that they would have enough sufficient amount to pay for 2027 commitment, because it's still within the early part of the year of 2027. That's what we do. And of course, Microsoft and Oracle would be negatively affected by this, but as what we presented earlier, the majority of as soon as the OpenAI able to prove this commitment by 2027, and for example, Oracle complete their target construction, we think that is going to positively uplift the valuation for this company in the near future. Why Oracle retreat so much recently? The reason is simple, because in the previous result, they announced capex that is higher than what the market expected. The previous capex was at 50 billion, but the announced capital expenditure is at 90 billion if you include the prepayment from the customer as well. So it came out higher than expected, while the top line sales and income remains stagnant for what they gave up in the initial forecast. So the market's not looking at it favorably. So can you comment on the increasing debt of the Oracle in relation to the valuation and recommendation? Regarding the increasing debt, which was happening about 2 quarters ago, it is a 40-year tranche investment grade bond, and then the earliest maturity is in 2029, which at 5% yield expected, which we think is manageable, as their operating income expected in that year, 2029, is to grow to 58%, which the amount will be sufficient to service the debt from this service the interest on its debt as well. So it's not an issue in that front. And the expected, although the capex would grow higher in the near future, we do think that it will grow at a lower proportion, because now, instead of the capex come from the Oracle itself, partly would come from their customer, because of this new funding model where they decouple the capex from upfront payment would come from the customer first instead of them paying it upfront. So that would easing the burden of their capex, of their free cash flow moving forward. And also the top line will start to accelerate in the 2027 as soon as the target project in the Texas completed by the end of 2026, and the other 4 places region of target construction to start banking in 2027 as what they give in the guideline in the forecast. When would the negative cash flow to be positive? We expected the cash flow to turn positive in 2029. And this is coming from the re-acceleration in the top line. It would start in 2027 as soon as target project completed. But because they spend up higher capital expenditure in the initial year, the top line re-acceleration would only turn the cash flow positive in 2029 is what we expected. Yes. I think that's it for me. I will hand over to the next presenter. Thank you for any question.
Thank you, Fahmi. Good morning or good afternoon, everyone. I cover digital ad for Max 7. So, for me, I would still recommend both Meta and Alphabet, but I think between these two, Alphabet has a more, in terms of the monetization pathway, is still more visible because Gemini as a model at the moment it is competitive enough to compared to other LLMs such as like GPT for general use. Of course, Anthropic one is more on the enterprise, and I think the integration to search has been quite efficient in a way that the ad hits the target audience without being very invasive. So the user experience remains, and because of this very efficient AI model, the cloud business, because of the overall market demand, is still pretty high. So they are able to monetize it with by monetize the compute capacity, and then they're going to expand this chip business as well. So these are the big factors for growth and monetization moving forward for Alphabet. As for Meta, I think there are still some potential for this company because the recommendation model itself is still working really well. It will continue to boost ad revenue, but since the company putting a lot of money to join LLM competition, because they do have plans to have B2B cloud as a new revenue stream, plus the reverse of the mainnet deal, it will push some of the pressure back to the super intelligent lab team. But I think on the short-term basis, Meta share price will be slightly underperformed. It will be more volatile because it really depends on the feedback of their first few AI model launch, which happens to GPT and Gemini before. Yeah. And there is a questions about Anthropic IPO. When is IPO likely to happen? At the moment, the management is aiming for around like fall 2026. So it will be around September to December. But the exact date hasn't really been announced yet. So once it's announced and when they come up with the IPO prospectus, then we will provide more information about this. Yeah, thanks very much.
I think I'll take a few questions. First is CNMC is really languishing. How long is the wait before it will move up? So CNMC is affected by your gold prices. Currently, if you look at the gold price, it has been on a downward trend. And I think this also answers the other question relating to gold. So why is it trending downwards? What we observe is firstly, people are selling gold in place of or people sold gold in place of the SpaceX IPO. So they wanted to take some profits and they wanted to take some profits and recycle that into other stocks which might provide you with higher return. So that was one of the reasons there was quite a bit of a sell-off for gold. And secondly, in May there was a strong jobs report in the US. So if there's a strong jobs report, it means more people are employed. And if there's more people employed, it means the chances for a Fed rate interest cut is low. So if there is no Fed rate interest cut, then comparatively your US treasuries is going to be more attractive compared to gold. And that's also one of the reason why gold is still trending downward. So we think for CNMC it's largely market driven, and and uh, and this whole US Iran war has also uh pushed up your inflation. So when your inflation is high, um the they're not going to, the government is the Fed is not going to cut rates also. So that reinforces your case for gold falling. But no, there has been news on central banks. Central banks are still purchasing gold at these prices. China did one of its largest purchase in May, close to 10 tons. So if you are a long-term holder in gold, um, then I think this month by month variation may just be noise. So second question is, can you explain what SIA dim sum bonds are about? So for context, SIA went to the Chinese market to launch a 1.5 billion yuan bond uh, for a 5-year bond. So what this dim sum bond is when SIA goes to a offshore market in China, outside of China, to raise a bond in yuan denominated currency. And so what they're going to be using the proceeds of this 1.5 billion yuan, or about 220 million in SGD, is to fund their aircraft purchases for working capital purposes, and for refinancing some of their borrowings. And one of the main reasons why they would do that is likely because they are probably getting better or competitive rates in the Chinese market. If not, they would just be borrowing in Sing dollars. So we believe that there are some institutional investors who might be keen on lending and buying up those bonds, and that's why they went to raise bonds or issue bonds in yuan denominated currency. So UltraGreen trades in both USD, SGD. Which one do you suggest? I think it's the reporting currency for UltraGreen is USD. So if you are more comfortable with that, then perhaps USD is preferred. If you're indifferent, then I think it shouldn't really make a difference. Is the problem with UltraGreen's supply line of indocyanine likely to arise again? So the reason why this issue came about past few months ago, it was because so we talked about the different supply chain processes previously. One of the supply chain process is lyophilization, which is just freeze drying your ICG chemical. And what happened was that there was a human error. Someone used UltraGreen's lyophilization line and introduced a different bacteria into it. So that essentially meant that your lyophilization line is so-called contaminated. But the thing was, UltraGreen's products was not affected by this. And what UltraGreen actually did was to transfer their unaffected vials from Europe to sell in the US market because the demand is there for their product. So whether it will happen again, recently the UltraGreen just got approval and onboarded another lyophilization partner, and they are in the process of onboarding one more. So there will be 4 lyophilization partners, and that will de-risk the risk of such issues. I think that will de-risk it, but it's not a foolproof solution because these companies that do freeze drying, they do it for indocyanine green, but they also do it for other molecules. And so the risk is there, but I think UltraGreen has tried to minimize it. What's your view on OUE REIT divestment of Crown Plaza? We view it favorably. So this was something that the management has always guided. And I think it was something the market was already expecting. They're divesting Crown Plaza. Changi Airport. So that's for 500 million. And together with that, they will be issuing 20 million in special distribution over the next 2 years. And why we view it favorably, we think the asset itself, its master lease expiry is in 2028. So if it expires, then OUE REIT has to onboard or take over the cost of renovation, capex. All of these will also be capex heavy, and there's going to be downtime if they do all this renovation in the asset. So them selling it was really the best way to avoid all of that. And we also think that they are preparing dry powder for the potential further acquisition of Salesforce Tower Sydney. So previously they already had a percentage stake in Salesforce Tower, and one of the existing owners or investors called Ping An is already in the market trying to sell off 50% of their holdings for about over 800 million. So it could be that OUE is preparing the dry powder for that, and they're executing on all of these disposals to put together and to potentially increase their stake in the tower. For a company with 40 million revenue, UltraGreen, the targeted market cap of over 2 billion, do you think it's reached? I think the company is a leader in the ICG space. So I think this also answers the other question, which is their market share relating to their competitors and their economic mode. So they are a leader in the ICG space. So the way to think about it, you have your fluorescence guided surgery. So that's the large umbrella. Your indocyanine green is one of the dyes used in fluorescence guided surgery. There are other dyes used, such as methylene blue, but those are for specific procedures. ICG is for generic. You can use it for generic purposes or generic procedures. So the market size for ICG is much larger. And of this market size, for ICG, UltraGreen has the largest market share of over 60%. The other competitors, such as Stryker and Sub Pharmaceuticals from Belgium, both of them have about 20% and 8% of market share respectively. But UltraGreen has 60% of this. So they really have the largest market share. And why we think that's durable and why we think it's economic mode is because you can think of the indocyanine green like paracetamol. It's a very generic drug. It's a very safe drug. It's been around for a long time. And for these big companies like Stryker and Sub Pharmaceuticals, their revenue source or main revenue source is not indocyanine green. We talked about the imaging hardware earlier. Many of them are focusing on that imaging hardware because, like we said earlier, it's priced much higher. It's about 50,000 to 200,000. So ICG is such a small revenue portion for them, and so it's not worth the hassle for them to try to gain more market share in ICG for them, and that's why UltraGreen differentiated itself by really cementing itself in this drug or molecule and it's trying to capture a larger portion of the market. So for that reason, and also because they have something that other companies do not have, which is the quantification software, which if commercialized can be used across hospitals. We think the market cap and valuation is not reached at the moment. And comparable peers who we looked into, which includes both the DAI as well as the AI platform operators, they're trading at 11 to 12x EV/EBITDA. And for our valuation, we only use 7x exit multiple. And in that sense, it's still very conservative, and we think there is room to grow for UltraGreen in the coming year. FY26 will still be vials, volume, and price driven, but FY27 onwards, we would see contribution from the quantification software. So SET's gone up a bit recently. What's the catalyst? So I think there is no specific catalyst, but the reason it has been going up is because they proved their business model and they proved that they are not as affected by geopolitical uncertainty. So their revenue was still stellar in even during the US-Iran war. And that's because they don't really have much of a Middle East presence. They have a Middle East customer called Riyadh Air. But Riyadh Air is a new airline. It just opened in 2023. So they are not really flying to that many places. So as a proportion of revenue, your Middle East revenue is really low. And if you look at your current oil prices after this ceasefire, it's back to the March levels, which is about $70+ per barrel. And for SET specifically, about 50% of their revenue comes from all of these passenger planes belly capacity. So when your oil price is falling and your passenger travel is expected to pick up, it also means that the SET's business will also be more resilient going forward. Does UltraGreen have a dividend policy? So for UltraGreen, you can think of them as a growth stock. Management guided us a 30% dividend payout ratio, so we use that in our model also. I think that's all, and I'll pass on to the others.
Thanks, Hashim. I'll just try to do 5 minutes, then I'll hand you over to Zain for the technicals. In your opinion, when would capital start to move up again? Is it range bound for a month? Okay, I'm not sure how the move will do every month, but I can see what I'm looking for to move the share price is, of course, M1, the ability to sell M1 will be one, but I doubt this will happen soon. Probably, hopefully, maybe year end if I had to guess. The second thing will be the results. So the new power plant has started, so that will contribute to earnings. We think spark spreads, which is electricity, the margins on electricity will also improve, so that will be another driver. So I think operationally that will help drive the share price, better results. And the second bucket of share price catalyst will be the asset monetization. So with M1 gone, of course, that with M1 deferred, that kind of hurt the share price. But we think the next one could be the rigs. So I think they mentioned before that the rigs, hopefully something can happen this year. So rigs is the other bucket where you can expect some drivers to earnings growth. The third one is more structural, so that it will be the growth in the asset management. So just to dial back, Capital's plan is to become a global asset manager, a global size. So the ability to grow the number of assets, so that will be the share price drivers. I think for me, the next, I don't know about 1 month, but at least the next few months. The next is Thai. Alex Biopharma seems to go weak after the initial spike. Has fundamentals changed? Can we have a TA for as well? So I'll leave the TA for Zain. But for the fundamentals, firstly, of course, on Thursday we will have the corporate insights. So, the gentleman or lady who's asking the question, feel free to dial in and you can ask the same questions to them. But for me, there will be 3 share price drivers. Number 1 would be in the nearer term would be the EUA. So one thing is the emergency use authorization. So they are still trying to get approval from the FDA to sell to the US Army. So the US Army wants the product, but you still need to go through the formality, and then to sell to the US Army, hopefully to stock it up and then to get regular use. So that's number 1, the wafer min. Number 2 would be, of course, the phase 3 development. So that would be to get the final approval. So that's ongoing because I'm assuming that they are working with the US Army, continuously to get this done. And the third would be they are starting a new business in the US, which is I think they mentioned in the announcement of a B2C business. So that of course you can be a bit more cautious on that because something that they've not done before. But to sell direct their products, to commercialize their 30, 40 types of products, which is the core technology is to put it under the tongue, and to use the compound pharmacy pathway, which is probably less known to most of us. But compound pharmacy means you can use a telehealth, and with a doctor's recommendation, you can actually sell the Wayfarming direct to the customer, and they were working with partners. So the key is to work with this Orion, which is one of the US partners, which has a factory which they mentioned has already ordered machines for this, and of course for the army, and also to set up the pharmaceutical chain which the partner has. So these are the three key things to watch, and but it takes time. I mean, working with the FBA, there's a lot of loops you have to, a lot of red tape and so forth. But once you get it, you get it. I mean, it's a barrier to others too. So I mean, feel free to dial in and then just ask them these questions. Any reason why CSE share price global continue to drop? I'm not particularly sure. I didn't go for the last two briefings. I'm not sure if I think Hashim or whoever went can answer that. Why Del Monte results so badly? I didn't have a chance to do the call, but I will try to find out, and then hopefully if you can post the question again, I'll try and give you an answer. Okay. Hi, can you comment on Bumi Tama First Resources, Wilma, please? Are the three counter share price expected to have this more upside since El Nino highly probable in second half? Which of the three really top pick in the sector? Okay, so we don't cover the three, although I probably listened to all the calls for the last 10 years. But the reason why we don't cover is because if you want to cover palm oil, best to do it out from a Malaysian analyst. So because if we do for Singapore, we might lose out. There's a lot of news that comes out in Malaysia. So that's why we are very hesitant. We worry we get disadvantaged by it. So but of the three, the one that we like the most is probably First Resources. It's a pure play on palm oil, and they just made the acquisition, so their growth in production will be stronger because they got the acquisition of a new palm oil estate. I mean, like a better word. Number two, they are still in the biodiesel, which I think the authorities mentioned they're going to grow, expand it, and the third is like you mentioned. I think if you believe that the El Nino, then maybe there will be upside to this stock. Of course, all these stocks have been sold down because of the planned centralization of. They wanted to. There was this plan to centralize. That means anybody who wants to buy palm oil or coal, or I think it's nickel, has to come from one central body, which was almost impossible if you ask anybody in the industry, because it's just logistical nightmare, finance nightmare, admin nightmare. So this I think has been kind of not shelved, but tapered down to more a monitoring, the reporting function. Hope that helps. XMH is a good. Yeah, sorry, we haven't really met XMH before. Maybe it's something we'll probably try to. I think I have the contact. Let me try to follow up on that. So sorry, we don't really follow XMH. Yeah. What's the impact of the silver suit? I think immaterial. Yeah. And you're doing a silver suit against Temasek in a way. I'm not sure how successful that would be. Alsim proposed to transfer to member. Will it be a catalyst for Q&M? Not really. I think all these transfers don't really help. I think it will just help improve the free float of this company because there's a minimum float. It won't really change much if you're just talking about this transfer. More important is the turnaround in the operations, so that will benefit Q&M. Meta Optics, I'm not familiar. Has Foundation Healthcare done an IPO briefing? Okay, so Foundation Healthcare has done a briefing. The reason why I didn't put out any slides because they didn't provide any IPO stats. So I didn't. Probably going to be launched maybe tomorrow, but I didn't want to come up with a slide and I can't tell you what's the valuation and so forth. But then I'll be like, yeah. But what they do, let me just briefly tell everyone. So Foundation Healthcare was set up in 2022. Then they got money from some PE, some Temasek link companies, and then they did this roll up thing. So roll up means they started acquiring a lot of specialists. I think now they have 70 over specialists. So the positive of this is that you grow fast, I think, without asset light. But one thing when you are doing a roll up, when you're acquiring specialists, your asset is not the clinic. Anyone can set up clinic if you have money, right? Of course, the asset is the specialist. But specialists also, I mean, hate to say this, they do have a shelf life. After all, you can't be a specialist for 20 years, also maybe your hands start to shake. I'm just kidding, but so if I have to do a specialist healthcare, there is a hidden depreciation. You're technically arbitraging on not depreciating the specialist. Yeah, so there's something to be more mindful of because the asset is technically the person. Of course, you are. Yeah. So what they do is they recruit specialists, and then the business is basically the specialist healthcare. I mean, they're just recruiting specialists in a few procedures. I've forgotten which are the ones. Their growth they're trying to do is day surgery. Yeah. If they price the IPO at 20 over times, then it will be expensive because I think hospitals are still important in a healthcare because the value of the hospital is that you don't have to, you're doing a procedure, you don't have to run around. I need, especially for emergency. If you're doing day surgery, I think better to do it in a hospital in case there's an emergency, if you understand what I mean. But anyway, we will try and give a better briefing once the IPO stats is out. So yeah, unless there are any other questions. Yeah. Why is I'll answer this last one and hand it to Zain. Why Singtel sold Gulf shares? So Gulf, okay, so actually it's a very, very positive thing they sell. So of course, number one, they sold it for 1 billion. They still have another 1.8 billion. Of course, most important, you sell it, you get the monetization. And Gulf wasn't contributing to earnings. So Gulf used to be InTouch, and InTouch was contributing to associate earnings because they had 20%. Then they merged with Gulf, which is a power, and then at least they have this big entity that can tackle data center because it was a merger. And when you sell this, right now Gulf is only providing dividend yield, which is very low. I've forgotten what's the number. So it's good that they sell it, then they get the monetization and they can pay special dividends. They call value realization dividend. Basically, just think of it as special dividends. So it's a positive thing. And they have another 1.8 billion because Gulf wasn't contributing anything to the P&L. I said dividend yield, which is small. Hi, Paul. Is the job reports this week expected to be strong? Yeah, I think the expectations is 117,000 jobs, if I'm not mistaken. More important is to look at what are the types of jobs. So if it's a government and healthcare jobs, then of course the quality is less. Yeah. Okay. Oh, sorry. Any updates on the EQDP funds deployed? Okay. So there's another 1+ billion. My suspicion or speculation is maybe there's been some time, several months since they last announced the last batch. So maybe the market has run up, especially small cap. So maybe they were a bit hesitant to deploy the next stage. So in a way, they are actually backstopping any weakness in small mid cap. So if the small mid cap is down, maybe they can start announcing the next batch of deployment. Again, this is all speculation. Yeah, I hand it over to you, Zain, for TA.
Yeah, thanks, Paul. I'll move on to the TA. So I think there was a question to repeat on what I talked about the S&P earlier. So maybe I'll just jump back to the slide first. Yeah, so to summarize, I think there could be some further weakness for the S&P 500 in the near term because if you look at the chart, the daily chart wise, there's a potential breakdown of the potential head and shoulders formation being formed. There's no breakdown yet, but I think the key level to watch would be around the 7,265 swing low level. And then also whether price can hold this green line, the 50 SMA level over here. And if you look in terms of the weekly chart, last week was the first week it closed under the 10 SMA on the weekly chart. So price had been holding above this dynamic support seen from the March rally. So I think that was an important signal as well. Yeah, so this is just my thoughts on the S&P 500. Yeah, with that, I'll move on to take some of the TA questions. So I'll just share my screen for that. So first questions on Singtel, Q&M Dental as well as Keppel DC REIT. First one I think for Singtel looks nothing too much going right now. In terms of the trend wise, I think it's still rather, I think the weakness in the short term will still likely continue. If you look at the weekly chart, I think price is still generally under the 10 at SMA weekly, which is 448. Some improvement recently as their price is holding above the 5 SMA weekly, which is 435, so with some rebound. So I think looking a bit better, but overall likely to be still weak if you look at the like short near term to mid term levels. So for now, I think some resistance will likely be this gap area like 448, which is the weekly resistance as well. And I think support will likely hold in terms of the daily time frame. That's about 437. We have the 10 SMA level, and price has been sideways recently. Although positive is that we have some higher lows along the way. So I think generally will be a bit probably not as weak as before, but I think price will probably do a range from between like 437 to 448. Yeah, that's my feel for Singtel in the short term. Next one for Q&M data, I think in terms of the price action, I think some weakness recently. In terms of the trend wise, I think has been a breakdown in terms of the key level here at the around the 58 cents level. Yeah, so and also I think this is a horizontal level as well as the uptrend channel support level coupled with decreasing momentum as well. So I think we could still see some I think we are still likely to see some weakness in the near term to for price to test around the 54 and a half cents to 55 cents area, which was a key resistance previously for quite a long time. So I think that will likely hold as support and resistance likely at 58 cents. So I think we became this like 30 this range over here. Yeah, for Q&M in the short term. Next one is on the Capital DC REIT. So for Capital DC REIT, I think generally nothing too much, but some a bit still of a weakness because generally since the pullback from the 21st April over here, generally price has been still forming lower highs and lower lows. And generally if you look at the 100 band, still a very tight range. So I think support could still be around the recent lows around 222, 223, and resistance generally at 228 to about 230. So I think it's still probably in a tight range over here and just moving sideways for Capital DC REIT. Next one on some US counters on Broadcom, Google, Nvidia, and the 3 times leverage XOXL. So first one on Broadcom. I think for Broadcom, in the short term wise, I think some weakness with the generally price has been a bit range kind of range bound over here. The resistance was met last week when price retested the 20 SMA level, this yellow line, and also the previous horizontal support around like 406 over there. Then throughout the week, there's some weakness when price continue to find some resistance at this was 388, which is 10 SMA as well as the 5 SMA. And Friday it closed below the 373 level as well. So I think short term wise, we are likely to see some weakness. Next key support I think that could hold the price is around maybe 352, which was the previous horizontal level. And then some resistance will be the breakdown of last week, above 372 to about 380, I feel. Yeah. The next one on Alphabet. Yeah, for Alphabet, I think some weakness as well. I think there was quite a key breakdown last week of the 348 level, which was previously this swing high resistance in February this year. Then price did a retest with a continued lower high bounce, and then last Tuesday there was a breakdown which acted as resistance on Wednesday, this 348 key level. So I think this will be a key resistance in the short term. And then price actually retested the next key support, which is 331. So I think we're still likely to see some weakness for now. Then the current resistance might come from the 5 SMA level. I think that could be expected to about 340 to 348 likely to be the near-term resistance. Then 331 needs to hold. If not, we could still see some continued downside for a possible gap fill over here. That's at 321, and as well as this was previous horizontal key level. So that's 319. So that's the next key support for Alphabet. Next one for Nvidia. Yeah, Nvidia also some weakness last week. So in terms of the charts, price continue to face key resistance at this 211 key level. So this is a key level because previously price during the pullback price found support over here, which was also the previous all-time high. So these 211 held as support, and afterwards there was a breakdown that acted as resistance during the retest last week. And then another thing is that price broke down the 199, this key support level. So also like 200 is a psychological level as well. So I think near term wise we could still see some some weakness. Next key support, I think possibly price could find some support is this previous horizontal area, which is like 184 to 189 area. I think that could hold the price as a short-term support. Yeah, and then short-term resistance is about 199 and above to around like 203. And then next one is the SOXL, which is this semiconductor bull 3 times ETF. So it tracks the semiconductor index 3 times. It's like a 3 times long. So for the price action, I think as I shared earlier on the semiconductor index, I feel there's a bullish trap above the in the short term. So I think short term wise, it could see some weakness. In terms of the SOXL, looks like there's this bullish trap above 277, this level that's held as resistance, and then generally price I think is pulling back. So I think key support, I think that price could see some near-term weakness, I think towards to possibly retest this key upward support line over here again in blue. So that's about 192, 193. Possibly retest of this green 50 SMA level as well. I think that could provide some better support during this current a bit of a pullback. In terms of weekly chart, if you look at it, it's like a slightly below the 5 SMA weekly. So I think with that, potential is for some slight further weakness to test maybe the red line, which is the 10 SMA weekly. Yeah. So that's for the SOX. I think some possible near-term weakness following from what I shared on the SOX earlier. Okay, then next one back to some SGX counters, UMS sets as well as CSE Global. Yeah, first one for UMS. Generally, I think the trend to look at for now is still this range bound that's taking place. Generally between like 244 and then the key resistance around like 283. So last week we tested the key this key area again, the key range resistance again. Then there was a pullback from this level. Now now it's quite close back to the key support area again. So I think this 237 to 244 area, I think that will still likely hold as support for now. Then some resistance for now I think will be around 256 to about 262 right now for UMS in the near term. Yeah, then next one, in terms of the weekly chart, I think that this week could be quite important to close to our price. Will try and close above 256, which is the combination of the 5 and 10 SMA on the weekly. So price during the uptrend, price has been holding this dynamic support. So I think that would be quite important to close above this level. If not, we could still see a continuation of this near-term weakness for UMS. So that's my take. Okay, then next one is on sets. Yeah, for sets, I think overall it's still a very strong uptrend that we are seeing right now. So in terms of price action, still a very strong uptrend, and there was some consolidation during the first half of last week. Some resistance at 440, but price continued to break out to form higher highs, and there was support. The breakout was supported with increasing volume as well. So I think that's a positive sign, and also price is above the 445 level as well, and holding the 5 SMA as a support. So I think uptrend will likely still continue. I think the next key level to look at for sets, I feel it's the next key resistance could be around 464, 465. Okay, I think due to lack of time, I think I'll cover one more, which is on CSE Global. So for CSE Global, I think some near-term weakness. If you look at the chart, there's been a retest of the prior support breakdown level, okay, 140 to 152, then price pullback. Then on Friday, price also broke below a key level, which is this short-term upward support line, as well as the 140 level, previous days swing high resistance as well as the 10 SMA level. So back to retest the support zone again. So I think that this 126 move to about 128 will likely hold in the very short term. I think we could see some bounce, but the resistance could likely come from the today's about 137, this 5 SMA level, 137 to 140. I think that will be quite a resistance for now. So probably a lower high bounce, and then I think price could do a bit of a sideways or try to continue to test this support again. Yeah, in terms of the weekly chart, this weekly chart also shown some weakness with price breaking below the 20 SMA level. Previously was during the uptrend was holding generally around above this 20 SMA weekly. Yeah, and then some continued weakness last week in terms of the weekly. Yeah, so that's my take on CSE Global. I think it's about 1 o'clock. I think there's still some questions on the TA that I'm unable to answer. Apologies for that. I think due to lack of time. But feel free to post your questions on our Poems Tree community. Yeah, I'll hand over time back to my colleagues of Paul if they have any concluding remarks. Thanks.
Yeah, thanks. I think we got a lot of questions on the ThaiBev. I typed up much of it. So I think much of it is regarding the sustainability of the dividends. And so we think the dividends is sustainable. They've been paying this amount for the last 2 years. And you're still dealing with a consumer company where the revenue and cash flows is very recurrent. Of course, for alcohol, whether is it addictive or recurrent is up to everyone to decide. But the other question was on the US dollar. Yeah, I think when the Fed came out and became very hawkish, I think that pushed up rates and that kind of strengthened the US dollar. Just some general comments as I try to type as much as I can. Anyway, thanks everyone for your time. I hope it was useful. Sorry, I think some mentioned there was some echo, probably at Fahmi's side and some slight technical issues. But anyway, thanks everyone for your time and hope it was useful for you. Thank you everybody, and do join us for our SSP on Saturday if you have the time. Yeah, thank you everybody. Bye bye.